Do you believe in financial freedom, or does it seem a little bit far-fetched? I thought just that when I first heard about it as well. So what is financial freedom? Financial freedom is having enough residual income or passive income to cover your living expenses. It's not about being rich or having abundance of money. It's about giving you control over your time, which would otherwise be spent working year in, year out for a salary. Financial freedom comes down to your ability to follow a plan. The very first step you need to take on your journey to financial freedom is understand how much you need invested to be able to live off. This income needs to cover your expenses forever. Just know that what you need invested is not the same as what you need to invest. So how do you work this out? Well, there's more than one way to skin a cat, but there's a very well-researched concept which is called the 4% rule. This rule was part of the Trinity study, researched by 3 finance professors at Trinity University, and it's one way to find your financial freedom number. The 4% rule states that you need 25 times your yearly income in order to be financially free and not have to work for a job again. For example, if you earn the UK yearly average of £30,000, you'll need to have £750,000 invested. How the hell am I going to do that, I hear you ask? I'll hasten to add that if you feel £750,000 is too high, there are other ways you can hit your £30,000 target. One other way is through property investment, for example, which tends to give higher and more predictable returns. Knowing your net worth sounds a bit much, doesn't it? You might think it only applies to the wealthy, such as Elon Musk or Tiger Woods. Wrong. It applies to you. If you don't know your net worth, and you don't track it, how are you going to know how far away you are from your financial goals? So what is net worth? Net worth is basically your assets minus your liabilities. Or put simply, everything you own minus everything you owe. Most people don't include the equity in their home property when calculating their net worth, purely because it doesn't typically give you a return. You need to ensure that your assets are greater than your liabilities so that you have a positive net worth. I appreciate that taking care of your budget is a very, very scary thing to do for some people. The psychology involved to take a look at your bills and your expenses versus your income can be very, very hard to do, especially if your finances are in poor order. Don't put it off, as scary as that may be, as this is a foundation upon which you'll build your finances. Controlling your budget has a direct correlation to generating wealth. To start with, you need to break your expenses into 3 categories: needs, wants, and savings. It may be that you don't allocate anything to savings today. Don't worry, you're not alone. It's estimated that 1 in 5 adults in the UK have no savings at all. A need is anything that you have to pay for. Things such as mortgage, rental payments, council tax, gas, electricity, debt commitments, etc. Talking of debt, be really self-aware and don't purchase on credit where it can be avoided. This means don't buy the new outfit that you wanted on card, or the holiday you wanted to go on, or the kitchen that said that you don't have to repay until next year. Don't get more comfortable buying on credit card than you would do paying out of your current account. Otherwise you'll start becoming numb to debt and your brain will just tell you it's just another number. After determining your needs, you need to understand what your wants are, and I suggest putting them into order of importance. You may rate going to the gym more important than going on holiday, but these choices are personal and you need to figure out what's important to you. Once you complete this exercise, it should give you a much clearer understanding of your financial situation. Once you've worked out what your wants and needs are, you need to target 10 to 20% at least of your rest of your income for savings and investments. Rather than spend what you want and save the rest, target your savings first and then spend the rest. Your investment target will determine which, if any, of your wants you'll have to learn to live without. This is super difficult and I know firsthand. I used to have a relatively new car. I sold that and bought one for cash, and that freed up around £500 a month for me. But it was a super difficult choice to make. Tracking your money can feel really overwhelming. I personally use an app called Emma. Emma helps you track your finances by connecting all your accounts in one place, helping you to set budgets and categorise your expenses. I'll leave a link in the video description below. There are plenty of other finance apps that will help you do the same thing, or if you feel more comfortable, just do this in an Excel sheet. But either way, make sure you're tracking your expenses on a monthly basis and in control of them rather than them in control of you. When it comes to managing your money more effectively, there's a rule called the 50-30-20 rule, which is basically 50% should be on your needs, 30% on your wants, and 20% should be targeting for investing. If only life was this easy to be able to only spend 50% of your income on needs. But budgeting is a very individual thing. No two people's finances is going to be the same, so set your own parameters and stick to those. If you are struggling to save, there are plenty of ways to reduce your existing costs. Martin Lewis of Money Saving Expert has a lot of ideas of how you can reduce bills, and they can be found on his website, moneysupermarket.com. Maybe you could even start an additional job in the evening to supplement your income. One night a week could generate you £200 of additional income a month. To reach financial freedom, it's really important you find a way to invest. The earlier and the more you invest, the quicker you'll hit your target. Having been through this exercise, you could be forgiven for thinking, I need a pay rise. Most likely you'll have one in the coming years, which brings us on to our fourth step that you need to take. So you got a pay rise and you've been paid an extra £150 a month. Congratulations, that's amazing. Now what are you going to spend it on? That's the first question that most people think of when they get a pay rise. So would you rather buy a £150 wallet, or would you rather buy a £10 wallet and have £140 in it? Lifestyle inflation is where your spending increases with your earnings, and it's one of the biggest wealth killers. Rather than setting aside some of your additional income to savings, it's so easy just to go to a nicer restaurant, go on a nicer holiday, buy nicer clothes. I have made all of these mistakes myself, but you should be asking yourself, just because I can afford it, should I? What is most important to you? Certainly you should allow yourself some freedom and creature comforts, otherwise life is boring, as long as you're investing a minimum of 10% of your salary. If you stick to these principles, it will stand you in great stead. So we've covered 4 steps so far: finding your retirement number, understanding how to figure out your net worth, controlling your expenses, and also making sure that you avoid lifestyle inflation. There is only one thing now left to do to be financially free. The last step in your journey to financial freedom is to invest. But is investment really for me, I hear you ask? Similar to the term net worth, isn't this for fat cat bankers and the elite? Nope, absolutely not. Investing is the only way you can make your money work for you. Money work for me? What on earth does that mean? I cover exactly this topic in this other video. Investing can seem really daunting when you look at the types of investments and the opportunities you have to invest today. In recent years, it's become much simpler to invest than in the past. You can even buy individual stocks on your phone whilst commuting to work, for example. But with this ease of investing has also come complexity, especially for someone just starting out in this area. You can, however, massively simplify the topic of investing. And if you don't have areas of expertise, I would start out looking at property investment and ETFs. An ETF is an exchange-traded fund, which is a group of stocks or shares bundled together in one wrapper. The advantage of this is that you don't have to have an in-depth knowledge of the stock market and particular companies, as your investment will be diversified, meaning that if one stock does really badly, you don't lose your whole investment. I would suggest looking to purchase these within the Stocks and Shares ISA due to the tax breaks you get on these. I will do a follow-up video on this topic for those who are interested. If you'd like to learn more about investing, either in property or why you cannot afford not to start investing now, then these videos will be of help to you. If this video has been useful for you, please hit the like and subscribe button. I'd really appreciate it. Thank you.